folks, and welcome to the Contrarian Trader. This is Robert Desmond. It is Sunday, November the 23rd, 2008. Folks, before we get into the week ahead commentary, what I'd like to do is touch upon Friday's trade. My last video I recorded on the 20th, which was at the after the close on Thursday. I mentioned I was bearish on the market due to the fact that we had broken below the 775 level on the S&P 500. Let's get some visuals on this and go back to the monthly chart, which I've been using. Now, you'll note that the 775 level marked the low of the 2000 to 2003 bear market. We fully anticipated that we were going to test this support level, and I had hoped that we would see defense of the support level and that we would rally off of it. On Thursday afternoon, when we hit the support level, we didn't see a defense of that support level. Yeah, we did. We bounced a little bit, but then we gave it right back up and even closed lower on the day. So it was a very, very bearish day on Thursday. We closed out the day at extreme oversold intraday levels, so much so that at 3:39 in the afternoon, and with only a few seconds left in the trading day, I sent out a market order to purchase the SSO, which is the ProShares Ultra S&P 500 ETF, and that's a long trade, and we are up on that trade right now. We did pop up on Friday morning, and we had a catalyst for that rally, which was the appointment of Tim Geithner, who is the president of the New York Federal Reserve, as the Treasury Secretary under the Obama administration. Also, we had an announcement that Larry Summers would be Chief Economic Advisor for President-elect Obama as well. Now, these two are respected people on Wall Street, and when the traders heard the news on Friday afternoon, they took it and ran. We saw a huge short covering rally. I do think that we are going to see a continuation going into either next week or the following week. We may come back down, retest that 775 level. We're not that far from it right now, only 5 points away. We'll probably retest it, and hopefully we'll rally back off of it. For those who are not long the market now, there's no rush to get into this market. We are going to see a pullback. Let's take a look at the daily chart now. We'll probably rally up to the 850 level and then get a pullback, hopefully back down to the 775 level, and then's your time that's your time to jump back in. Then you use your stop loss order right under the lows, which were, let's say, 741 on the S&P 500 if you're trading the S&P 500. On Friday, what caused us to get a little bit more bullish on the market was something that we identified on Thursday, and I mentioned it in that commentary as well. On Thursday, we made new multi-year lows, but we failed to make new highs on the VIX index. And you'll know we didn't even challenge the recent highs at 89.53. What that tells us is that traders were not willing to pay more of a premium for put options to protect their current positions. And it also tells us that there wasn't a rush to add puts by speculators in anticipation of a further decline in the S&P 500. That's what also precipitated our move to add the SSO at the end of business on Thursday. So we saw a further deterioration on Friday of the VIX. If we see a breakdown below this 44.25 level on the VIX, you can expect to see a massive rally in this market. On Thursday evening, I received an email from one of our subscribers to the Contrarian Trader, Peter, and I wanted to address his question to everybody. Peter's question was, is now the time to get long Citigroup at its current price? My answer to Peter and to everybody out there is no. Please stay away from Citigroup. More than likely, it's going to be another redo of AIG. The Federal Reserve will come in, or the Treasury will come in, bail them out, wipe out the existing shareholders, and wipe out the preferred shareholders as well. Please stay away from Citigroup. It's not waters you want to be swimming in right now. Stick with the best of breed of this group, the J.P. Morgans, Goldman Sachs, which we added on Friday as well. I sent out an alert to our subscribers that we would go long of Goldman Sachs. Similar parts. We had a key reversal on the financials. Same reversal on Goldman Sachs. Okay, so we have a lot of short sellers in here that will need to recover their positions. So we anticipate a rally in Goldman Sachs. We've been cautious on Goldman. We still remain cautious, so we're going to use the lows of Friday as our stop loss point. If we break below the 47.41 level, we'll be out of Goldman Sachs. Quick, Jack be nimble. We'll be out fast. Also, let's take a look at the U.S. dollar. The U.S. dollar, I've made mention in the past couple of videos, I've been concerned with. Now, the reason being is that what you're seeing is a negative divergence, meaning the RSI, which should be headed higher as the U.S. dollar proceeds higher. It remains in an uptrend. It has yet to break that uptrend, but as it heads higher, the RSI is heading lower. That should be concerning for those who are long the dollar. If you take a look at gold, which we are long of, we have been long of gold since the beginning of November. It's been consolidating here on Friday. It gapped higher. Also, the FXE, which is the euro, it's been consolidating since late October. It's looking sharp here. We had a key reversal on Friday. If we break out here, you can expect a break in the dollar. So keep an eye on this because it's important. The reason why it's important is because you're going to see a rally in the commodity names. Stocks like U.S. Steel, beaten to death. If the dollar corrects, steel's going to rally. You can also see USO. We have a small position in the USO. This is the oil fund. You're going to see oil rally as well. So just beware of this. You might want to start nibbling at these commodity names if the dollar continues to weaken. Let's keep an eye on the retailers as well. Retailers on Friday flashed another negative key reversal. I'm looking for this sector to rally in the coming days. I was out Christmas shopping this weekend. The toy stores are wiped out of a lot of high quality names. Granted, I know the parents are going to always shop for their kids whether or not we're in depression, recession, good times, bad times. I understand that. But after I left the stores, went to Ruby Tuesdays and had a 30-minute wait just to get a salad bar. So people are out there spending. Oil prices are down considerably. People do have some disposable cash they've been saving up, and I think that the retail sales numbers, they're underestimating them right now. I think they're going to come in higher. So let's keep an eye on that. You have a phantom tax cut with oil prices coming down so much. Home heating oil in the Northeast down considerably over last year. So that's more money in people's pockets. Same with gasoline, more money in people's pockets. So people are accumulating cash out there. These recent retail reports are showing that people haven't been spending it, so they've been hoarding it. So keep an eye on retail sales, and you may want to jump in on some of the high quality names. A and F. I'll touch upon this later in the week as the week progresses. Folks, one thing I want to make clear of is that we are not out of the woods yet. Please maintain a trailing stop loss order. If your broker does not provide you with a trailing stop loss order, that feature, you need a new broker. Leave a comment if you need a suggested broker. I've been more than happy to provide it to you. Or if you want to email me questions at bob@thecontrariantrader.com, and I'll get back to you as soon as possible with my answers. We are not out of the woods yet in this market. If we break below Thursday's lows in this market, please go to cash, because we will be seeing 600 on the S&P 500 quicker, sooner rather than later. Hopefully we do get a rally, a continuation going into next week. Hopefully a Santa Claus rally, and our credit markets free up, and hopefully we can get this economy rolling again. And if you have any questions at all, please, again, feel free, contact me, bob@thecontrariantrader.com. I look forward to hearing from you, or you can leave a comment, and please subscribe to my channel. Good luck trading. Please use a stop loss order and stay off margin for now, okay? Please. And good luck. Thank you.